Welcome to Technical Tuesdays. This is our first. We're going to be talking about Bitcoin sentiment in a unique way. We're not just going to show one view and just say, oh, we're bullish or bearish. We're going to give you data so you can think and make up your own mind. This presentation is not financial advice. We're here to entertain you. There are different ways to read sentiment. You can look at the crypto fear greed index, which is similar to the CNN one that's used in equities. You can look at social media conversations, the Altcoin index, the put to call options data, and futures positioning on the CFTC. The crypto fear greed index has been in negative or fearful territory since April. It's been in extreme fearful territory since mid-April to May. So this is like the longest period, I believe, that it's been this consistently negative. So that's something to think about. This index is similar but not the same. All these indexes are calculated differently. This index is calculated off of a few social media feeds like Reddit and Twitter. And this index, like the other one, like the fear greed index, has been negative since May, even mid-April, May. And it's actually hit zero a few times. So there's extreme fear and negativity coming from the social media area. This index, the Altcoin index, simply compares the performance on a moving average of Bitcoin versus all the other major altcoins. And it too has been in basically a fearful area since March, even earlier than other ones. And the reasoning is that when investors are speculating, they tend to buy more altcoins and they pump and eventually dump. So right now we're not like that. We don't see speculation. So that's a pretty good thing. Okay, this is a part of our presentation that gets a little technical. There are many ways of presenting this data. I just gave you an older one here. This chart here is up to May 20th. But it's a really good chart. It could explain something people don't talk about, and that's implied volatility. There are many angles to looking at put-call options data. You could look at the put-to-call ratio, implied volatility, which is in this chart. You can look at skewness, basically how much you're paying for puts versus calls. And you want to make sure they're telling you the same story. So the story here, beginning in May, has been higher implied volatility. And I'm sure it's near May's levels right now because of what's going on in Bitcoin. And this is shown, basically, it's like what the VIX is shown, right? When the VIX goes up, it shows that there's fear. So this is showing fear. Now, skewness, I don't think I have a chart on skewness. Skewness is currently showing that investors want protection. So what are they doing? They're buying more put options, but beyond that, they're paying more for those put options than they're paying for those call options. So once again, the options data is showing that investors have fear. Like options data, futures data can get really complex. I could spend 1 hour showing you about a dozen slides just on futures. So let's just cover one or 2 points. Futures positioning and basically funding rates. So these are funding rates on perpetual futures. So perpetual futures, like they sound, do not expire. So they're good futures because they don't have to deal with rollover and the shapes of that curve. And what's important here, just forget it, you don't even need to remember what I said. What's really important here is to see where the funding rate turns negative. When it turns negative, it turns red. So you can see here lately in the last month or two, you've got some columns showing red. So basically that's showing that speculators are paying more to the other side. Basically, they're paying more to short futures than go long. So it's in this case somewhat bullish. So why would I say it's only somewhat bullish? since they have fear and they're paying short futures guys. The reason is because if you go back to March 2020 during the COVID crisis, the red columns just spiked down. There was panic selling of futures. So we don't have that right now. Something I like to look at in the oil market is the curve of the futures market. This is analogous to also look, besides oil, to also looking at treasuries, how they talk about the yield curve. So this is basically the futures curve over time. And it looks pretty steep, like it's in what they call contango. But in reality, it's not, because if you look at this chart closely, the near-term Bitcoin futures are selling around 20,300, 20,400, and the long-term futures, if you will, going all the way out to March, only 20,600, they're under 21,000. To me, that's almost like a flat futures curve. So in my opinion, it's not that bullish. You're not seeing the smart money or the efficient market in this case. And this is the case where I think the market can be efficient. The market's not saying that the futures price of Bitcoin is going to go up. So this is so-so. So what's our verdict? Overall, I'm short-term bullish. Crypto investors are fearful, and remember, that's a contrarian indicator. Options activity is bullish, and futures positioning is slightly bullish. And this includes a slight contango in the yield curve, not the yield curve, the futures curve. Also, something I didn't mention is confluence. Equity investors are very fearful, as represented by the CNN Fear Greed Index. So you've got confluence from another market that's aligning with the bullishness in crypto. So that's all a very good sign. So if we're going to get a short-term rally in crypto or even in stocks, now's the time. Good luck, everyone. Thank you.